Hello, good day, guys. My name is Nick, technical analyst for SuperForex. Today, we shall be looking at the technical analysis on the currency pair, the United States dollars to the Canadian dollars. And first, we'll be talking about fundamentals before we move right down ahead to technicals, which is purely what we're going to be seeing on the chart. Now, we have seen that the USD CAD retreats from a weekly high and holds a steady below mid 1.350s ahead of the US CPI. And of course, the USD CAD struggles to capitalize on its modest intraday uptick amid modest USD weakness, of course. Bearish crude oil prices undermine the loonie and they help limit the downside for the major. Traders now look forward to the crucial US CPI report before placing fresh directional bets, while the USD CAD pair fades on an early European session spike to a freshly weekly high and quickly retreats to the 1.3525 to 1.3530 region in the last hour. The downside, however, seems cushioned amid bearish crude oil prices, which tend to undermine commodity-linked loonie. In fact, WTI crude oil extends this week's sharp pullback from over a 2-month high and remains depressed for the third successive day amid concerns over fuel demand in China. While a raft of weak economic data from China pointed to sluggish growth in the world's largest consumer oil, which in turn is an act as a headwind for the black liquid. That said, modest US dollar weakness is likely to keep a lead on any meaningful upside for the USD CAD pair. Now, traders might also refrain from placing aggressive bets and prefer to wait on the sidelines ahead of the release of the latest US consumer inflation figures. The crucial US CPI report will play a key role in determining the Fed's policy tightening path, which in turn will influence the USD price dynamics. Hence, it will be prudent to wait for strong follow-through buying before confirming that the USD CAD pair has formed a near-term bottom. Now, from a technical analysis point of view, we have seen the post-NFP breakdown below the 50-day SMAs and support near the 1.3500 psychological mark favors bearish traders, of course. Now, this further warrants some caution for bullish traders and positioning for any meaningful appreciating move for the USD CAD pair. That said, an upside surprise from the US CPI will revive bets for a more aggressive policy tightening by the Fed and boost the US currency, negating the negative bias. Technical levels to watch USD CAD overview. Why today last price at 1.3535 today daily change of 0.003 to the daily change, of course 0.02% today and daily open of 1.3532. We're expecting at this point an entrance and most likely a touch to the 1.34377 zone, which is about 100 pips from the entry point before possible touch of 1.34055. An alternative scenario means a bounce back to the upside. We are looking out for 1.36670 threshold, which is about 130 pips from the entry point, of course, which is good money. That's our technical analysis on today's currency pair, the United States dollars to the Canadian dollars. Now let's move over to the stock markets. Hello guys, welcome back. And today's on stock markets, we'll be looking at Tesla. Tesla Incorporation has been down with 1.10% in pre-market trading since Tuesday after the company announced the recall of 40,000 2017 to 2021 Model S and Model X vehicles. According to the recall, the vehicles may experience a loss of power, steering assists when driving on rough roads, or after hitting a pothole. Now, the National Highway Traffic Safety Administration said a loss of power steering assist can require greater steering effort, especially at low speeds, increasing the crash risk. Now, Tesla has said that it has identified 314 vehicle alerts for this condition among US vehicles that may be related to the recall, but said it is unaware of any injuries or deaths related to this condition. Now, the company released an over-the-air software update to recalibrate the system after it began rolling out an update on October 11 to better detect unexpected steering assist software. As of November 1st, more than 97% of the recalled vehicles have installed an update has already addressed the recall issue. Separately, Tesla is recalling 53 2021 Model L's exterior side rear view mirrors that were built for the European market that cannot comply with US rear visibility requirements. The rear mirrors were installed during the US service visits. Now, what to expect from this? We are looking at a decline and most likely a push up to regain some momentum from this, and putting our stop loss very tight at 175.93 and having the trade to run up to the latest support zone at 202.34, which is nothing less than 42 pips thereabout from that entry, which is good money, of course. And that's our technical analysis on today's stock market. Tesla, I remain your host, Nick. Bye for now.